But this is going to be a year of reflection, a year of thought, and a year of maybe a little bit of fear as we head into the brand new year. And that is what's causing everybody to sit on their hats. What you did see yesterday was what I think was the big push on the tax loss harvesting. So in other words, when I see companies like Tesla, when I see companies like Google, Microsoft was trying to hang in there, but Apple, AAPL, usually something that people like to buy, like the window dress with. This one's sliding down the slope of hope again. 20-day cross below the 50-day. You are now seeing a lot of reasons that people are pulling money from the market. And in this case, with Apple down 26% for the year, the first time that people have looked at it and gone, holy cow, I can't believe I'm holding Apple and it's losing going into the next year. This is where you're making a little bit of, seeing a little bit of the selling based on the tax loss harvesting. Now, I do think that this push of cash, all of this money that's come in off truly out of stocks onto the sidelines, not the money that's shorting and has you home usually on the sidelines and then gets put back in and pulled back out. No, this is money that is long term, not meant to be on the sidelines. I think as we see this pullback, probably going to weaken into the end of the year because people are going to get a little nervous. Look for January 1st to be a little bit of a pop, take off, or whatever you want to call it. I don't call it a rally. 2 points have to get together to be not even a trend, but a line, and then 3 points for a trend. And right now, your trend is definitely the downside. I think you get a little disruption in that next week as people are taking this Apple money and this Tesla money and figure, what the hell? I got to do something with it. So when it comes back in, I don't know if it's a BAM yet, 6 series. I don't think it's BAM. I think it's a little bit of a whimper. And I think it's I got to get some of this in, but the money that's going to come in, that's going to drive things for the longer term, is not ready to come in. They're still shaking and quaking over in the corner right now, wondering why the people on CNBC can't tell them what is going on with their stocks. And for that reason, they're going to sit idly and watch and wait until the market goes up 20, 25% or so. Do you want to know, Brandon, ask me this question. All this stuff is going to come out on a free flow today. All this stuff. Ask me a question about which road did I want to go down there? We'll figure it out in a minute. We'll figure it out.
How much lower can it go, CJ? I mean, Apple. If we're looking at Apple, we're looking at Tesla. Looking at both those stocks, for example, how much lower are we talking for real? Because
on what? Name a stock.
Okay, Apple. Let's just focus on Apple right now, right? So struggling on all fronts, in my opinion, because Apple's doing what Apple does, and they're horrible right now. How much lower can they go?
I'm not saying it because it is a round number. I'm saying 100. I'm saying we could see 100 on Apple once we start to figure out the true valuations that are out there in terms of cash flow and how interest rates. Remember, interest rates are going to affect Apple as well, and the consumer. The message we've heard, dude. The message we have heard for the last 2 months, and we heard it last week. At the latest, we heard it last week, is that the consumer is still fine. We're hearing that the consumer is fine. And this to me,
are we serious? I paid $6 a dozen for my eggs. I am not fine. This is hilarious. I don't know who's fine, but no, we're not fine. I promise you. This is crazy talk. Yep. I'm not going to be buying an iPhone. I'm going to be spending every ounce of money I can on eggs. So that's it. That's why I asked you. Like, this is nuts, man. That's where I did get it. It's Costco, AJ1. $6, I get 5 dozen eggs, and it lasts us 3 days. So we paid $30 at Costco for 5 dozen eggs. This was absurd. It was absurd.
But the consumer's fine.
Yeah.
The consumer's fine.
My eye hole. This is interesting, CJ. I don't think that we've ever seen this precedent before. So that's why this is very interesting. We're going to watch this thing. So you said 100, right? So 100 for Apple. Is that your buy point, or is that where we watch to see if it breaks? If it breaks, what happens then?
That's
Okay.
where I start nibbling on Apple. I start nibbling on Apple at $100. Amazon, we talked about Amazon a couple weeks ago in the consumer discretionary spot. $80 is where I start to sniff around a little bit. 75 is where I start to actually do some put sells on Apple and start to pick this up. I do believe Apple's got, or Amazon rather, has another 15 to 20% of downside potential here as well, even with AWS. Because remember, when everybody looks at AWS, Brandon, and they say, oh, well, they got AWS. But if companies are slowing down on their business services, if they're starting to pull back whatever they can, well, that affects AWS as well. So they've got the double whammy of the retailer who's going to start slowing down a little bit here. And they've also got the back end business service that they have to worry about slowing down. So everything that I look at, I just say to myself, when I do that walk down Main Street, first of all, I answer the question, is the consumer more healthy than it was before? I went someplace yesterday to do a little bit of shopping, and they said that everybody was out yesterday. It was their busiest day, right? Everybody's out buying everything. And I said, why is that? And he said, well, it's everybody that got gift cards that weren't going to spend money unless they got gift cards. What? And he said, yeah, it's everybody that's been holding back because they wanted somebody else to give them something that they could go out and buy something with. That's weird to think of. I mean, is it all the kids buying their stuff with their moms? I don't know. But I look at Amazon, 75 is where I start dipping my toe in this. And then I buy at 70. I buy a little bit lower on Amazon. But this is long-term money. This is the stuff I'm going to use in 10 years, not in 10 days or anything like that. Another thing, Brandon, I wanted to bring out is when we look at the S&P 500, the SPY, one of the reasons, and this is one of the things that everybody wants to keep in mind here, and let's look at the cubes real quickly, because that's the better way to look at this. Everybody has been busy trying to catch a bottom, right? We hear all the analysts tell us, oh, well, I think the bottom's in on stocks, right? We get a 20% rally. It's a consistent number. And then it rolls over and it bites everybody in the butt again. And you take out those lows, right? And then what do we get here? We get an 18% rally, right? 18% rally. And then it rolls out and it's getting ready to take out those lows on its way to a 250 print. Here's your biggest thing. When we talk about sentiment rallies, and everybody out there, when you are thinking about getting into the market on the long term, think about this simple thing. The fear involved in trying to touch this market when it's down here at 250. Sure, you're going to get maybe that 20% rally. And the smart ones out there are going to start selling when they get up here, assuming that we're going to get down. This is why most people miss the first 30 or 40% of a market rally, because by this time, they want to let that first 15 or 20% go, right? Because they have been twice bitten, third time's a charm, third time's shy. You have to at some point take a dollar cost, in my opinion, pick out those stocks that you want, hold your nose and start buying them. Still trade the market with your other accounts. But in these cases, when we get down to these points, you start to think about, yeah, I'll buy Tesla if it gets down to, I don't know, $80 or so. Well, I'll buy Amazon. You can spend all your time buying Procter and Gamble to try to prepare for this. Bottom line is you're playing the market way safe, and you end up usually losing money safely. Just pick your points and start sticking to it.